Nvidia reclaimed its title as the world's most valuable company on Tuesday from fellow Magnificent Seven, Microsoft. And shares of the chipmaker rose roughly 3% during the trading day, boosting the company's market cap to $3.45 trillion. Joining us now to discuss this milestone and reachieving this milestone, what it means for the tech trade, we've got John Belton, who is the Gabelli Funds portfolio manager here. John, good to have you here with us this morning, and thanks for taking the time. Just the significance of Nvidia once again being the most valuable publicly traded company here.
Yeah, I'm not sure I read too far into that. That's not really my part of my framework, but I do think very clearly the AI adoption cycle, AI usage, and on a related note, the AI investment cycle clearly remains in a very strong phase. I think we are seeing serious inflection in adoption of major AI services, and along with that comes the need for more AI infrastructure. So I think a company like Nvidia, a company like Microsoft, those are stocks that had lagged for most of the last, call it 6 months. They were probably due for a rebound given the fundamentals behind the AI industry remain so strong.
So if the AI industry remains strong, how do we think about who the potential tech winners and losers of that might be? Because before, when tech has been disruptive, it's been to an industry like retail, with the e-commerce, for example. But now the AI tech could be disruptive to the tech companies who may not all be winners here. How are you thinking about that?
Right. I mean, I think there's very broadly 3 types of companies that are participating in this industry today. And this is a very rapidly evolving industry, but you have chip companies, semiconductor companies, server companies, the companies that are providing the computing infrastructure on one layer. Then you have companies that are coming together to provide the physical infrastructure, so the data centers that are housing the computing infrastructure. And then at the top, you have companies that are building applications and end user facing services that are making use of all the technology. So I think right now what's become very clear is the appetite for AI compute and AI infrastructure is extremely strong. And I think that will continue for at least the next couple of years. What's a little bit less clear is at the application layer, who are the winners and losers going to be? What are the new use cases going to be? And I think beyond the early use cases of chatbots and digital media and cloud infrastructure services, there's a few exciting potential newer use cases like agentic software,
right,
autonomous driving, some use cases in healthcare, but that's going to take longer to play out.
Yeah, since you bring up the application layer, it makes me think about Amazon and their approach with Bedrock to offering a significant amount of options to customers as opposed to really hyper betting on one specific model the way Microsoft has with OpenAI. How do you rate Amazon's strategy in the AI race?
Well, I think first and foremost, Amazon's doing a lot with AI to bolster their core e-commerce business. They're doing more with offering generative AI to their advertisers to create ads that can be shown on their platform. They're doing more with using AI to place the right products in front of the right people. And then they're starting to use more AI in their fulfillment centers, introduce more robotics and do more with automation, which is helping their margins. They're also using it clearly, as you referenced, on the AWS side of their business as sort of an infrastructure provider to third parties. So I think they have a business that lends itself very well to AI naturally. In terms of building their own software applications, I think one of the beauties of the cloud infrastructure model is you can let specialists, third-party specialists, build those on your platform and participate in those economics as well. So that's more where I see things progressing for Amazon, specifically when it comes to building AI software applications.
But let's take a look at one of the major components, the big mover here at the open. We're tracking Nvidia, and of course, not the largest mover right now. It's up 0.7%. But here's the move that we're talking about. The valuations of Nvidia, Microsoft, and Apple here. And if you take a look at this chart, here's where you could see Nvidia reclaiming its top spot, but they're still jousting neck and neck here in terms of Microsoft and Nvidia's market cap. However, we will see going forward from here, how analysts continue to weigh in. You'll remember some of the commentary coming out of earnings as we were listening into Mizuho. Mizuho was talking about a lot of the concerns being behind us there. Their exact words within that saying the key risk factors and headwinds keeping many underweight on the stock have definitely lessened or lifted. Bernstein, they had said, takes a licking and keep on ticking. Wedbush and Dan Ives saying the godfather of AI delivers again. China H20 headwind, well known, still robust. So all of these things considered, we're now seeing even more of an appetite for investors out there who hadn't already piled back into Nvidia, now having the earnings in the rearview mirror and going forward seeing more total addressable market opportunity, potentially even in a market that they have to try and figure out what type of chip can actually get past some of the regulations and past the sniff tests as they are looking to ship into China. Oh yeah, and some major partnerships in the Middle East as well that Jensen Huang was able to net in recent weeks. We'll see how those come to fruition. But all that considered, the world's most valuable company, once again, Nvidia. We'll see how some jousting plays out over the course of today's trading session as well. Investors fled into the stock back in January as part of the AI scare around China's DeepSeek. They fled out of it, and then ultimately a broader tech rout and concerns over China chip curbs have kept the stock below the $140 per share marker since February. But get this, shares closed above that level Tuesday, rocketing up nearly 50% from April lows. And that means big gains for CEO Jensen Huang. As of June 3rd, Jensen Huang is the 12th richest person alive, according to the Bloomberg Billionaires Index. Huang has a net worth of over $123 billion, and the majority of which is in his ownership of Nvidia stock. He owns about 860 million shares, according to a filing from early March. Huang recently got his first base salary pay bump in a decade. His base salary as the president and CEO of Nvidia for fiscal 2025 is $1.5 million. That's up 50% from fiscal 2024. Variable cash opportunity or compensation based on certain performance metrics that also increased 50% from last year to $3 million. And Huang's target equity opportunity or compensation through stock options or other equity awards that rose by 25% to $27.5 million, slightly above the median of his peers. Nvidia shares are up 5% year to date, and Huang's net worth has increased by nearly $9.3 billion in 2025.